Paying attention to the president, what he's going to be doing about the California wildfires. He is visiting the region this weekend. There are reports that the electric giant PG&E already faces $15 billion in damages, and a lot of people want to know exactly what it knew and when it knew it about potential problems that it might have caused. There's no proof of any of that, but of course, PG&E is a focus of those investigations. From the Insurance Information Institute, Michael Barry. Michael, good to have you back.
Good to be here, Neil.
So this is costly, to put it mildly, beyond just all the tragedy. But I'm told that it could be the costliest for insurance companies. Is that true?
It's possible because we're talking, well, first off, the loss of life is just extraordinary. I mean, we're talking about a grim record that held for 85 years in California. It's now the Camp Fire. The latest death toll as of this morning from that event was 63 lives. There's still hundreds of people unaccounted for. There's a death toll of 3 down in the Woolsey fire. But yes, when you talk about now the insurance implications, we're talking billions of dollars. We're talking about homeowners insurance, auto claims, businesses that were destroyed or aren't going to be able to operate for a long time. So, yes, it's in the billions of dollars, both events combined.
You know, a lot of people look for culprits in this. There were reports that PG&E was aware of sparks or some of its equipment. I don't know what's what. You know, it's hard to reconstruct a lot of this, especially now. And probably now is not the time when the focus should be on helping people. But what do you make of that? What do they piece together after the fact? And even insurers say if a company might be a culprit or among them.
Well, this is something that gets worked out oftentimes in the courts. I mean, it was a big topic of discussion for good reason. The California state legislature, the utilities wanted to see to it that their liabilities, that they had the financial wherewithal to pay if, in fact, they were found to be liable. But I think for the insurers, you're right. I mean, what are they looking at now? I mean, the insurers see themselves as economic first responders. You look up at Butte County, you look in Ventura and Los Angeles counties. In California, if you're under a mandatory evacuation, and even if you incurred no damage, you're entitled to additional living expenses. And a lot of, let's talk Butte County, for instance. There's mobile catastrophe vans that a lot of insurers have there. Their customers are coming up, and on the spot, they're getting debit cards with thousands of dollars of additional living expenses. So this enables people to have the resources for temporary housing. A lot of people lost their cars. This is going to enable them to rent their cars. So, again, right now, from the insurer's perspective, they're, I don't think, really focusing on what caused it, but they're focusing on responding to their consumers' needs, and there are a lot of them right now.
All right, Michael Barry, thank you very, very much. Catching up on all of this on the insurance side.